Hey there, keen traders. This is Currency Watch. Let's take a look at the Fire and Stacker trades, and then we'll look at a few of the other majors. Interesting, we have maybe a breakout in the Euro and the USD Swiss franc. And in the Fire trades, we had some nice volatility in the Great Britain. Let's go through the setups that we had last night. If you guys remember, I had on this spike down lower here to the 84 level, which happened in New York trading yesterday. I was looking for a pullback. I don't remember if it was 86.20 or 86.40 level. Pretty sure it was 86.40 level, and we obviously did not get that. And then with the data, the employment report that beat expectations yesterday, we had the quick push down in the well, I guess it was the push up in the Aussie, which pushed the Great Britain Oz down to the support zone. So then at this point, I was looking for a move back to not just the 50 fib, but the 0.618 fib, the 184.20 level. And the reason that is I didn't want to take on all the risk of this candle. I mean, this was a 184.94 to one. This was a 190 pip candle. So I was looking to get myself in with about 70 pips of risk, and that is what we did there. Actually, it was 75 pips of risk. Triggered nicely, and then closed it to break even at the break even. When the pair was up 50-60 pips, and I was pretty confident that we were going to get a good move in this, but there's a reason for everything that was done. What we have here is this pair is basically at the bottom of this range right here. We could very well see a pushback back to the top side the way this pair has been trading lately. We haven't broken out of anything, if we're going to say it in that context. Maybe in this very small channel here that could have been creating for a higher high, higher low, and the Aussie USD is back at the 0.9100 level. And with this setup here, we could always jump in on another pushback down. It is disappointing, I have to admit, that we didn't get this entire move from the 85 level down to the 8301 level. But let's say you did do that trade and you are in that trade right now. What I would do is I would have placed the stops at the 84, lock in 100 pips, so we would have been closed out at the same spot, or you could and get your 100 pips at that point because of this volatility in this pair. Because of this whiplash, and we're at this trend line here. This 4-hour candle will be interesting, and if we do get a push back up above this, I will not hesitate to move back into this trade. So let's make the current setup right here while we're sitting here. This is the bottom of the range, which is going to be 163 level, and let's see, excuse me, 183, and the top of the range, very simple enough, is the 184 level. I mean 185 level. Well, let's make it exact. It's the 184.95 level. So at this moment, we're going to look for a break of this range in either direction, and that is going to give us our direction in the near term. So it could have been a nice setup, and if you are still in, like I said, I would consider taking some profits here, taking a little bit off the table, because we could easily reverse because of the outstanding circumstances. Great Britain JPY, same setup as yesterday, still in play, the 171.50. I mean, in all honesty, it's about the 171.60 level right now because of that way those wicks went. So let's just say 171.60. And that is the top of the range that we're looking for. And we will be trying to find a break of the 171.60 or the 171.10 level. Let's just save these samples, and then once I finish this, I can text them out to you guys on the blog. And so in those two levels, they have not been broken, but I have a pretty good feeling we're going to get a breakout in this yen cross sooner or later, because it has been, when we get to the yen, I'll talk about that. Let's take a look now at the stacker setups. Let's look at the one that hasn't doing anything, the Great Britain USD. This guy is still between 168.30 and 165.80. Nothing doing there until we get a break of that. But more importantly, let's take a look at this Euro USD. This euro broke above the trend line, officially closed down the support level, and it was a minus I think 42 trade for myself. So now what I'm going to do is watch this daily close here very closely, and see if this see if this is an opportunity to stack into this trade. Now, what are you going to watch here? And if this pair moves back more than 50% on this initial push higher, that is a pretty negative signal, and I will not try to stack into this trade, and we could be a chance we just drift down this trend line. But if we close above that, then there's a good stacking opportunity. Right now I have an order to go long at 139. The close will be important because it will be negated if we like I said, if we do, depending on this 50 fib close. USD Swiss franc, very similar situation. We finally broke below this. Hopefully we can get out of this chop, which we really haven't been able to do anything with. So below this level here, we were looking for the 87.55. Basically what I'm going to do is right now the orders to go long, go short right there. Right now, once this closes, depending once again on this 50 fib, I'm going to run a fib through the whole thing, and that's going to give me my target price or target entry on that. Now let's take a look at the other pairs that we have. Let me just save this layout real quick. Let's take a look at the other trades, and I never changed the name of this one. Alright, so, well, here's just a look and more detailed on the chart. You can see that the pair has broken higher, and and it is above this ascending trend line at 139. So that is where we're getting to a higher bias. The US Swiss franc, you can see, broke below that trend line. That's coincided with the trades on charts, and the Great Britain, we know, is out in the range. Now let's look at the other ones. The Aussie USD back at this 0.91 level. This is the key holder break level. If we hold at this level, then it does favor a continued push down lower. We'd look for a push down towards the 0.278380. I know I've said this a million times. 4-hour closes will be interesting to watch here, because if we get a nice reversal or see a nice hold right there, it could be an opportunity to go short this pair for another push lower. If we do break above that, though, then boom, it's off to the races. And the New Zealand did push right through, so of this support zone. So now we're looking for the 8680, 8540 level. Now the Japanese yen, where I was saying that we have a chance of breaking out of this range, it's just that it has been in this range since over 6 weeks. And the cross is sitting right about mid-range right about now, and I would expect that with the volatility that we're having in the euro and the pound and the Aussie, New Zealand, eventually these will be catalysts for a move where people will start using the yen as a funding currency once again, and we'll see larger moves in those crosses. Just look at this, the Great Britain JPY, as we talked about, trying to bounce off that trend line that we've been talking about, and the Great Britain not much to say there. That's technically from a non-trade on the charts. Alright, so I'm going to send out the setups for you right there. Actually, let's take, we'll send out those trades out there for you, the new setups, and it has been a very interesting time. If we had held that trade from the ECB that we closed for the spike, it would be very nice. It'd be up almost 200 pips right now. So we just need to I guess with these slower gradual markets that we're having right now, I'm going to start trading right through the news, not and just going with the trends and limit my losses, because it seems with the slow markets the catalyst for most moves are based on quick news and then consolidation. So it's going to have to be the way that you have to you adapt or die. That's what we've said before, and that's what I'll say now. All right, everybody, have a good one. Talk to you later.